The best thing about investing is that you don't have to wait until you have a significant corpus to begin. Even though it may be the case for high-ticket investments like buying a house or other large-ticket items, the majority of retail investment alternatives can be started with as little as $1,000 each month. In this video, we'll be talking about 5 proven ways to invest your first $1,000 in 2022, step by step. But before that, make sure to subscribe to the channel and hit the bell icon for more amazing content. Let's start the video now without further delay. Number 5. Stocks. Buying stock to invest in means obtaining ownership stakes in publicly traded businesses. The little shares are referred to as the company's stock, and by investing in that stock, you're making a long-term growth and success bet on the business. Other investors might be ready to buy your shares from you for a higher price than you initially paid as a result. That means that you might profit if you decide to sell them. The stock market is a long-term endeavor. Diversifying your portfolio and maintaining your investment position through market ups and downs is the best course of action. One of the best ways for new investors to learn how to invest in stocks is to deposit money into an online investment account, which can then be used to invest in stock mutual funds or stock shares. In many circumstances, you may register a brokerage account and start investing for the price of one share. A paper trading option is offered by some brokers, allowing you to practice buying and selling stocks using stock market simulators before investing with real money. Yes, you can start with $1,000 per month and still invest in equities and build a strong portfolio. There will be a big market of companies priced below what you can invest in, even though this amount may put certain more expensive equities out of your price range. Even if you only buy a few stocks, the adage goes, you should do well if you carefully examine the market and invest in a fundamentally sound company with a 7 to 10 year investment horizon. According to the stock price, you can decide which stocks to purchase one at a time or all at once, explains us in an ETF or index fund. Index funds replicate the performance of a current stock index like the S&P 500. You will own stock in every company included in the S&P 500 index if you invest in an index fund that tracks that index. Exchange-traded funds and index funds are great options for investors with a limited budget. The fact that these funds are extremely transparent investments is another benefit. A few phrases can tell you everything you need to know about a specific ETF or index fund, including its holdings, any commissions, and the expense ratio. In contrast to ETFs, which can provide additional options for portfolio customization, index funds are essentially passive, broad market investments through the major indices. You can combine ETFs with various risk profiles for $1,000. You may, for instance, divide the funds into 3 equal portions and invest $250 in a higher risk, growth-oriented ETF, $250 in a dividend ETF, and the remaining $500 in a bond ETF. Alternatively, you can swap the ratios or even put everything in the growth ETF. Everything is dependent on your risk tolerance and the time horizon. Instead of using an active management method, index funds invest using a passive management strategy. When an investment manager actively decides when to acquire or sell particular investments, this is known as active management. The management fees for actively managed investments typically tend to be greater because someone else is choosing these products. Active management techniques are utilized by several mutual funds. Fund managers put a lot of effort into trying to beat the market, which is a market index, but they very rarely succeed. And even if they do, there is a very slim chance that they will outperform the market in the long run. Spiver, a division of S&P Global, reports that only 29% of actively managed funds outperformed the S&P 500 in 2019. Only 9% of those funds outperformed their benchmark in 2021. Passively managed index funds often offer investors with greater long-term financial returns because actively managed funds frequently underperform the market while index funds match it. They are also less expensive. Number 3. Invest in top crypto projects. Target an attractive ROI through crypto assets. For the goal of investing $1,000, we'll first talk about the unique asset type, which is cryptocurrency. In a nutshell, Bitcoin was the first crypto asset to launch in 2009, and thousands of other digital currencies have since followed. The most well-known initiatives in the field outside of Bitcoin are Ethereum, XRP, BNB, Cardano, and EOS. When it was first introduced more than 10 years ago, Bitcoin, for instance, was trading at less than $1. Since that time, Bitcoin has climbed as high as $68,000. This means that early Bitcoin investors have seen profits of more than 6 million% in just over 10 years of trading. In a similar vein, 31 cents was used as the initial token offering price when Ethereum was released in 2015. By late 2021, Ethereum had hit highs of about $5,000. That represents increases of more than 1.6%. Many digital assets that were introduced as recently as 2020 have since produced growth on par with that. Importantly, this indicates that the overall cryptocurrency sector is currently the best performing asset class in the world of investments. But it's important to keep in mind that there is still some danger involved with using cryptocurrencies. For this reason, risk-averse investing techniques like dollar-cost averaging and diversification should be taken into account by investors who want to participate in this sector. However, despite the fact that mature crypto assets like Bitcoin and Ethereum still have room for expansion, the gains described above will probably never be witnessed again given their multi-billion-dollar values. As a result, many investors are increasingly focusing on emerging initiatives in an effort to invest in the upcoming cryptocurrency bubble. Number 2. Recurring term deposits. Recurring term deposits, a product most banks offer, let you deposit a certain amount each month and earn interest rates for deposit accounts. Currently, interest rates for recurring term deposits range from 3 to 9% annually. This is a useful method for fostering the habit of risk-free saving and investing. Recurring deposit offers a rate of return that is quite alluring. In India, taking out a loan against your recurring investment is a common option offered by banks and other non-banking financial institutions. You may be eligible for a loan on 90 to 95% of the total amount you've deposited, depending on the financial institution with which you have an account. The short-term returns on your principal deposited cash are ensured by recurring deposits. In the case of mutual and equity funds, this is the exact reverse. Versatility is also another important advantage of a recurring deposit investment account. You can even delay an installment with a few Indian banks and non-banking financial institutions. Additionally, they don't even charge anything for performing the same services. It's a great choice to put your time and money into a recurring deposit account because the initial investment almost always generates a profit. One of the finest simple financial products to invest in is recurring deposits. It's simple to put your time and money into recurring deposit accounts. Recurring deposits are a wise investment choice as a result of everything put together. Recurring deposit account holders are frequently advised by investment gurus to choose short tenures since they offer a fairly competitive interest rate. Taxes must be paid on interest from recurring deposits. This tax can be avoided if you choose an extended recurring deposit account. You can add nominees to your account if you have a recurring deposit account. You can open a recurring deposit account in your name and as a joint holder with anyone, as well as the name of your minor kid. This is so that everyone, regardless of age, can open an account for recurring deposits. Number 1. Commodities. Hedge against the stock markets by gaining exposure to commodities. Ever pondered the commodity trading landscape in 2022? When determining the best strategy to invest $1,000, commodities should be the last asset class to be taken into account. In this market, there are numerous distinct commodities to take into account, the majority of which are either soft or hard. The latter contains everything from gold and silver to platinum, while the former includes energy like oil and natural gas. In either case, commodities often have a use, which guarantees their inherent worth. In times of economic instability, certain commodities, particularly gold, are frequently appealing to investors because they are thought to be stores of value. For instance, traditionally, gold has done well when the overall stock markets are pessimistic. There is a common misconception that buying genuine physical gold bars or crude oil barrels is necessary in order to invest in commodities. That isn't true though. A lot of retail clients will invest in commodities through an ETF. An example of a large cap ETF with actual gold backing is the SPDR Gold Trust. This implies that the ETF's price will fluctuate together with the spot price of the precious metal. A further benefit of using an ETF is that investors won't have to worry about keeping actual gold in hand, and they can cash out whenever the relevant market is open. Just $10 is needed to invest in a commodity ETF thanks to brokers like eToro's support for fractional ownership when it comes to minimums. Additionally, as was already mentioned, commission-free trading of ETFs is available on the eToro platform. Just keep in mind that since commodities like gold and other metals trade in cyclical markets, they are better suited for short-term to medium-term investments. That's it, guys. These were the 5 proven ways to invest your first $1,000 in 2022, guided to you step by step. If you like the video, make sure to subscribe to the channel and hit the bell icon. Leave a like, share it with your friends and families, and jot down your thoughts in the comment section below.